Hey everyone, and welcome to another deep dive. Today we're going to be really diving deep into Tata Power Company Ltd's Q2 FY25 results.
It's going to be interesting for sure.
I think so too, and I think our listeners are really interested to understand, what is going on with this major Indian energy player.
Yeah, absolutely. They're a huge company, and there's a lot going on in the energy sector in India and globally.
Yeah, so luckily for us, we have a whole pile of reports and announcements to kind of help us figure out what's going on.
We do. We've got their official letter to the stock exchange.
Okay, the
Yeah.
official words straight from the source.
Exactly. And then we've got this really detailed independent auditor's report, which is a little bit more of a deep dive.
Okay, so the expert analysis.
Exactly. And then just to make things even more interesting,
How?
we have a document all about Tata Power's commitment to sustainability.
That is interesting.
It really gives you a sense of where they see themselves in the future. And it's not just about the numbers.
No, not at all.
Yeah, it's about the bigger picture. All right, so we've got the official word, we've got the expert analysis, and we've got a glimpse into their long-term vision.
Sounds like a good starting point.
Yeah, so why don't we kick things off with the audited consolidated financial results?
Okay, sounds good.
So this is kind of the nitty-gritty of their performance this quarter.
Yeah, the nuts and bolts of how they did.
Exactly. So what kind of quarter did Tata Power have? Give us the headline news.
Well, looking at the top line, the revenue is a pretty hefty 32,991.29 crore,
Okay, so that's...
which is up from 30,951.32 crore in the same quarter last year.
Okay, so that's a...
Pretty significant jump.
Yeah, okay.
And then their profit before tax,
Yeah.
a respectable euro 3,263.21 crore.
Not bad at all.
Not bad at all, especially in this environment.
Okay, so on the surface, things are looking pretty rosy.
They are.
But as always, we want to get beyond,
Well,
just those shiny numbers.
we got to dig a little deeper.
Yeah, exactly. So what's the story behind the numbers? What's the context here?
Well, I think what's fascinating here is that these solid figures are coming at a time when the energy sector is in the middle of a global shakeup.
Yeah,
And India in particular is right in the thick of these changes.
absolutely. Yeah.
So Tata Power is trying to ride this wave while also dealing with things like legal battles and internal restructuring.
Yeah, that sounds like a lot to handle all at once.
It is. It's a real challenge for them.
It is.
But they seem to be doing a decent job.
So speaking of that restructuring, they did complete some pretty big mergers of their subsidiaries this quarter, right?
It did.
This wasn't just like moving desks around.
Oh, no, this is much bigger than that.
Okay.
They merged several renewable energy subsidiaries into Tata Power Renewable Energy Limited.
Okay.
This is a signal that they're really committed to consolidating their renewable energy portfolio and streamlining their operations in that area.
So it sounds like renewable energy is a pretty big piece of their overall strategy then.
Oh, absolutely.
Not just a side project.
No, this is a core part of how they see the future.
Okay, so it's all about, this global shift towards sustainable energy.
Exactly.
And Tata Power is trying to position itself as a leader in that transition.
And I think a lot of smart investors are watching them very closely because of that.
Okay, so let's zoom in on those renewables then and see how they're actually performing.
Sounds good.
Okay, so looking at the consolidated segment information, say, how much of Tata Power's revenue is actually coming from these renewables? Are we talking like a trickle or a flood?
Well, hold on to your hat because this is where it gets really interesting.
Okay.
In Q2 FY25, the renewable energy segment brought in 9,525.92 crore.
Whoa!
That's a very healthy chunk of their total revenue.
Okay, so it's not insignificant.
No, not at all, in fact.
Yeah.
That's more than many standalone energy companies make in a year.
Wow.
So they're clearly not just dipping their toes in the renewable pool.
They're jumping in head first.
They are diving right in.
So it seems like they are really putting their money where their mouth is when it comes to the sustainability thing.
You got it.
But here's the thing.
What's that?
While they're pushing ahead with all this green energy, they're also stuck in this legal battle with a coal supplier.
Right.
Makes you wonder, are they trying to have their cake and eat it too?
Well, that's certainly a bit of a contradiction, isn't it?
It is. So let's dig into that a little bit.
Okay.
So Note 7 in both the consolidated and standalone financial reports mentioned this dispute with Adaro International.
Right.
What's the deal with that?
So basically, a coal supply agreement went sour.
Okay.
And now everyone's pointing fingers. And it's currently in arbitration,
Yeah.
which basically means it's in the hands of a neutral third party to decide who's right.
Okay.
Tata Power hasn't set aside any money for potential losses
Oh, really?
because they think they have a strong case.
Okay.
They seem pretty confident. but these things can be unpredictable. You never really know how they're going to go.
Yeah, they do seem pretty sure of themselves, but
Hmm.
what happens if they lose? What kind of impact are we talking about?
Well, they could be on the hook for a lot of money. The amount in dispute is not small,
Mm-hmm.
so it's definitely a factor to consider.
Yeah,
And it just adds another layer of complexity to their whole energy strategy.
right.
You're trying to build a sustainable future while also being tied to these legacy issues.
Yeah.
It's a tough spot to be in.
It does seem like they're being pulled in two directions.
Yeah, a little bit.
What's really fascinating, though, is that on top of all of this, the Ministry of Power told Tata Power they have to keep supplying power from their Mundra plant,
Right.
which, you guessed it, runs on coal.
Of course.
So they're being told to keep this coal-fired plant going while also pushing hard on renewables.
Mm-hmm.
How do they even navigate that?
Well, that is the million-dollar question, isn't it?
It is. They're walking a tightrope,
They are.
trying to balance this commitment to clean energy
Mm.
with the very real need to keep the lights on for millions of people.
Yeah, it's a tough balancing act.
It is. And I think you've just highlighted why this deep dive is so important,
Well, I'm glad to hear that.
Looking at revenue figures is one thing,
Yeah.
but understanding the context, the forces that play behind those numbers,
Mm-hmm.
that's what really matters.
It's the bigger picture.
It is. And speaking of context,
Okay.
let's switch gears to another complex issue that's affecting Tata Power's financials.
Okay.
And that is the Delhi Electricity Regulatory Commission, or DRC for short,
Right.
and their tariff order.
Ah, yes. This one can make your head spin.
I know, right? So the consolidated financial report mentions this big regulatory deferral asset
Yes.
and a related tax expense because of this order.
Mm-hmm.
Can you break this down for us? What does all this jargon actually mean?
So basically, the DRC issued what's called a tariff true-up order for Tata Power Delhi Distribution Limited.
Okay.
It sounds complicated, but it's actually fairly simple.
Okay.
They're essentially adjusting the electricity tariffs based on the actual cost of providing that electricity.
Okay.
Think of it like this. You set up a lemonade stand, and you price your lemonade based on what you think it costs.
Mhm.
But then you realize you've underestimated the cost of lemons,
Oh, no.
right? So you need to adjust your prices upwards.
Right.
The DRC is doing something similar with the electricity tariffs.
The lemonade stand analogy, I get it.
Good.
But what does this actually mean for Tata Power? How will this order affect their financial performance going forward?
Well, that's the tricky part.
Oh.
The impact is complex,
Okay.
and it depends on how this asset is accounted for over time and how future tariffs are set.
Okay.
It throws in a bit of uncertainty,
Mm-hmm.
but it also highlights the challenges of operating in a regulated environment
Yeah.
where costs and revenues are constantly being adjusted.
Yeah, so far we've been focused on these external factors,
Right.
legal battles, regulatory orders, things that are largely outside of Tata Power's control.
Mm.
But let's bring it back to the company itself.
Right.
Internally, are their costs rising? Or are they finding ways to be more efficient? What's the story there?
That's a great question because it reminds us to look at these numbers within the larger context.
Yeah.
And one thing that pops out from their financial statements is that their employee benefit expenses have gone up.
Okay, so is that a bad sign?
Well, it's something to watch for sure.
Okay.
There could be various reasons for it.
What about depreciation and amortization expenses? Have those increased?
Let's see, in the first half of FY25, their depreciation and amortization totaled 3,128.59 crore,
Okay.
which is up from 2,465.60 crore during the same period last year.
Okay, so it sounds like that's gone up.
It has, but that's not necessarily a bad thing.
Okay.
If they're investing heavily in new renewable energy projects,
Yeah.
we would expect their depreciation to go up.
Right, because they have more assets to depreciate.
Exactly.
So it's not necessarily a sign that they're becoming less efficient.
Exactly. It's all about putting these numbers into perspective.
Mm.
What we really want to understand is, are these new assets generating enough revenue to justify that extra expense?
Right, so are those shiny new solar and wind farms actually operating efficiently? So the absolute value of depreciation isn't really what we should be focused on. It's how that depreciation relates to their overall revenue and profitability.
Right. It's all about the bigger picture.
We're talking return on equity, right?
Exactly. ROE.
Okay.
It's a crucial metric for investors. It tells us how effectively a company is using its shareholders' money to generate profits.
Okay.
In other words, are they giving you, the investor, a good return on your investment?
Okay. So that's what we really care about at the end of the day.
It's a key indicator of their overall efficiency and profitability.
So if Tata Power's ROE is high, it means they're using their shareholders' money wisely.
That's the general idea, yes.
Okay.
But of course, it's never that simple.
Right.
We need to compare their ROE to their competitors
Mm-hmm.
and to their own historical performance to get a real sense of how they're doing.
Yeah, this is starting to feel like peeling back the layers of an onion.
I know, right?
It is, but that's what makes it so interesting.
Absolutely.
And I think that's what our listeners love about the deep dive.
I hope so.
You know, we don't shy away from the complexity.
We embrace it.
We do, but we always try to make it understandable.
Right.
And maybe even a little bit fun along the way.
Well said.
So what's next on our agenda? Where do we go from here?
Well, we've gone through their financials.
Mm-hmm.
We looked at their approach to sustainability,
Mm-hmm.
and we've begun to explore their operational efficiency.
Right.
But there's one more piece of the puzzle we haven't tackled yet.
And what's that?
Their overall strategy.
Okay.
Where they are headed in this rapidly changing energy landscape.
Mm,
That's the big question.
that sounds like a perfect topic for part 2 of our deep dive.
Let's do it.
Don't go anywhere.
Welcome back, everyone. Last time we were digging into Tata Power's financials.
It was pretty interesting, right?
We found them juggling all these things, growth, profitability, this
Yeah.
big push for sustainability.
Right. And let's not forget that coal dispute.
Oh, yeah. That's a fascinating contradiction. Definitely adds another layer of complexity.
It does. So, are you ready to explore how their sustainability efforts are actually playing out on the ground?
Absolutely. It's one thing to talk about going green, but it's another thing entirely to actually put those words into action.
Right.
So luckily for us, we have this document on leadership and oversight on sustainability advocacy that gives us a peek behind the curtain.
Okay, let's unpack this. What are the key takeaways? What's their game plan?
Well, one thing that really stands out is their commitment to a comprehensive approach to sustainability.
Okay.
They're not just focused on the environment, they're also looking at social and governance factors,
Okay.
what they call a triple bottom line approach.
Triple bottom line. I like that.
It's catchy.
It
Yeah.
is. So it's about, making sure their actions are sustainable on multiple levels.
Exactly. Not just for the environment, but also for their employees and the communities they work in.
Right. It's about running a responsible business.
Precisely. Not just checking a green box.
Mm. Okay, so how are they backing these commitments with real action? How does this translate into actual financial decisions?
Well, we already saw that they're pouring resources into renewables.
Right.
But they're also weaving sustainability into other areas,
Hmm.
like their risk management, their supply chain, even their financing strategies.
So it's not just a side project.
Absolutely not. It's a core part of how they do business.
Okay, so give me an example. How are they incorporating sustainability into their financing?
Well, one thing they've been doing is issuing green bonds,
Okay.
which essentially means they're raising money specifically to fund environmentally friendly projects.
So they're tapping into a growing pool of investors who are looking for, ethical investments.
Exactly. And it allows them to attract investors who align with their values and who want to be part of a greener future.
So their sustainability commitment isn't just about doing good.
No, it's also about smart business.
Right, it gives them competitive edge.
Exactly. And it's not just about attracting investors either.
Okay.
It's about managing risk.
Oh.
In a world that's grappling with climate change, businesses that ignore sustainability are exposing themselves to a whole bunch of risks.
Financial and reputational.
Exactly.
Yeah.
So Tata Power is actively working to mitigate these risks, and that's good for everyone involved.
So it's like they're saying sustainability isn't just the right thing to do.
Right.
It's just smart business.
It is.
Yeah.
But, while they are taking these positive steps,
Yeah.
we can't forget about that elephant in the room.
The coal dispute.
The coal dispute, exactly.
It's a stark reminder of the challenges they face in breaking away from fossil fuels.
Yeah, it does feel like a bit of a contradiction, doesn't it?
It does. On the one hand, they're champions of clean energy.
Hmm.
On the other hand, they're fighting over this coal supply agreement.
Right. It's just like they're trying to walk in two directions at once.
They are, and it highlights the messy reality of this energy transition. It's not an overnight switch. It's a gradual process with bumps along the way.
Yeah, they're trying to straddle two worlds, the old and the new.
And to their credit, they are being transparent about these challenges.
They are?
They're acknowledging the need to balance the growing demand for energy with the urgent need to address climate change.
Yeah, and that brings us back to the Darcy's tariff true-up order that we talked about earlier.
Right. How does that fit into their overall strategy, especially with this big focus on sustainability?
Well, it definitely complicates things.
Yeah.
The order essentially forces them to adjust their pricing based on their actual costs,
Mm-hmm.
which could impact their ability to invest in new clean energy projects.
Right. Especially if those projects aren't seen as profitable in the short term.
Exactly. They need to keep the lights on while also planning for the future.
It's a real tug of war.
It's a balancing act for sure.
So we've got this company juggling growth, profitability, sustainability, regulatory compliance. How do they possibly keep all these balls in the air?
It is a lot to handle,
Yeah.
but I think their commitment to sustainability actually helps them navigate all this complexity.
How so?
By thinking long term, they are building resilience into their business model.
Mm-hmm.
They're preparing for the changes we all know are coming.
So it's not just greenwashing, it's actually a strategic move.
Exactly. It's about future-proofing their business.
Okay. I'm starting to see the bigger picture here.
Good.
We've talked about their financial performance, their sustainability initiatives, all very impressive.
Mm-hmm.
But what about their operational efficiency? Are they getting better at what they do, or are their costs creeping up? How are they doing on the nuts and bolts of running the business?
Oh, an excellent question. To answer that, we need to look at their operational metrics.
Okay.
Remember those rising employee benefit expenses we talked about earlier?
Yeah.
There could be several reasons for that. Salary increases, a larger workforce, or even changes in the benefits package they offer.
Right. So it's not necessarily a bad thing.
Exactly. We need to consider the broader context.
Okay. So what are some other key operational metrics we should be looking at?
Well, we know their depreciation and amortization expenses have been increasing.
Right. And we talked about how that could be driven by those new assets coming online.
Exactly. Especially in their booming renewables segment.
Right.
But here's the crucial question. Are these new assets generating enough revenue to justify that extra expense?
Are those shiny new solar and wind farms operating at peak efficiency?
That's what we need to figure out.
Right, so it's not just about the sheer amount of depreciation.
Yeah.
It's about how that depreciation lines up with their overall revenue and profitability.
Exactly. And that brings us back to the concept of return on equity.
ROE?
ROE. Exactly.
Okay.
Remember, ROE tells us how well a company is using the money invested by shareholders to generate profits.
So how efficiently they're using that money.
Precisely. It's a key indicator of how efficient and profitable they are.
Okay, so if Tata Power's ROE is high, it means they're making good use of that investor money and generating strong returns.
Right, which is what investors like to see.
Exactly, so it means they're a good bet.
Well, in theory, yes.
Okay.
But of course, we always need to compare their ROE to industry benchmarks and their own historical performance to get the full picture.
Yeah.
It's never that simple.
No, it's not.
Yeah.
This is getting complex, but it's fascinating.
It's like peeling back the layers of an onion, right?
It is. And sometimes it can make you cry.
That's a good one.
But honestly, it's this complexity that makes it so interesting.
It does. It really does.
And I think that's why our listeners tune in week after week.
I hope so.
So that brings us to the last piece of the puzzle.
What's that?
Their overall strategy.
Yes, the big picture.
How is Tata Power positioning itself for the future? What's their game plan in this rapidly evolving energy landscape? That's what we'll uncover in part 3 of our deep dive.
Can't wait.
Stay tuned. All right, everyone, welcome back to our deep dive into Tata Power. We've covered a lot of ground so far.
We have. We've looked at their financials.
Yeah.
We've talked about their push for sustainability.
Tackled some pretty complex regulatory hurdles.
It's been a journey.
It has, but now for the million-dollar question.
What's that?
What's next for Tata Power?
The big one.
Yeah, so what does the future hold for this company? And, what does that mean for someone like you who's maybe interested in investing in the energy sector?
Well, here's what's so fascinating. Tata Power is operating in an industry that's undergoing a complete transformation.
Yeah, this isn't your grandfather's energy sector.
No, it's not. The global energy landscape is changing rapidly, with renewable energy taking center stage.
Yeah, think solar panels on rooftops, wind farms, dotting the countryside, electric vehicles replacing gas guzzlers.
It's a revolution.
It is, and we've seen how Tata Power is trying to ride this wave, investing heavily in solar and wind.
Right, but they're still grappling with their existing coal-based operations.
It's a tough balancing act.
It is a real one.
So how do you see their strategy playing out over the next few years? What can we expect from Tata Power?
Well, I think we can expect them to double down on renewables, for sure.
Yeah.
They've set some really ambitious targets for expanding their green energy portfolio. And they're backing those targets up with serious investments.
Okay, so more solar and wind farms popping up.
Oh yeah, thanks. Big new projects all over the country.
Okay.
And they might even venture into some more cutting-edge technologies,
Like what?
like green hydrogen.
Okay, so really pushing the boundaries.
They're not afraid to be innovative.
That's exciting, but what about their coal-based operations? Are those going to disappear completely anytime soon?
That's the million-dollar question,
It
right?
is, and it feels like there are no easy answers.
No, there really aren't.
On the one hand, they face all this pressure to reduce their carbon footprint, align with, global climate goals.
Everyone wants to see a greener planet.
Exactly. But on the other hand, they have a responsibility to provide reliable, affordable power to millions of people.
Right. People who depend on them every single day.
Yeah, it's a tough dilemma.
It is a real one.
And then we can't forget about that government directive. Oh, right. The one that's requiring them to keep their Mundra plant running.
The one that runs on coal.
The coal plant, yeah.
So it suggests that this move away from coal is going to be a gradual
A
process.
slow dance, not a sudden breakup,
Right. And they need to keep those coal plants humming while they're ramping up the renewables.
which requires a lot of finesse and careful planning.
It does. It sounds like they're walking a tightrope,
They are.
balancing all these competing demands from investors, environmentalists, the government.
It's a juggling act for sure.
It is. So what does this all mean for their future?
Well, I think their ability to manage this balancing act is going to be crucial to their success.
Okay.
They can't afford to alienate investors who are increasingly demanding sustainable practices.
Right.
And they need to keep pace with all the technological advancements in renewable energy.
Mhm.
And then, of course, they have to navigate this complex regulatory landscape.
Which, as we've seen, can be a bit of a roller coaster ride.
It can be very unpredictable.
So Tata Power needs to be adaptable.
They do. And strategic to really thrive in this environment.
Exactly. They got to be able to think on their feet and adjust their plans as needed.
Okay, so what are some other key factors that could shape their future? What else should we be watching?
Well, the regulatory environment is definitely a big one.
Okay.
As we saw with that DRC tariff order, regulations can have a huge impact on their bottom line and their ability to invest in new projects.
It's like trying to hit a moving target.
It is. The rules of the game keep changing.
So they need to be nimble
They do very nimble.
and ready to adapt to those changes.
Absolutely. And I think we can expect more volatility in the future
Okay.
as the energy sector goes through deregulation and liberalization.
Right. So this isn't just an India thing. This is a global trend.
It is a global trend, and India is right in the middle of it.
So buckle up because it's going to be a bumpy ride.
It is.
But it seems like Tata Power, with their commitment to sustainability and their willingness to embrace change, they seem pretty well positioned to navigate all these challenges
I agree. I think they have a lot of the right ingredients for success.
and emerge as a leader in this new energy landscape.
I think so, too. They're definitely a company to watch.
So there you have it, folks.
That's Tata Power in a nutshell.
We've dug into the numbers, we have explored the big picture, and hopefully given you a solid understanding of where they stand today and where they might be headed.
We've peeled back the layers of this company.
We have from their financial statements to their grand vision for a greener future.
It's been a fascinating journey.
It has. But remember, this deep dive is just the starting point.
Exactly.
There's always more to uncover.
Always more to learn.
More to explore. The world of energy is dynamic and ever-changing, so keep asking questions, keep digging deeper, and most importantly, stay curious. Thanks for joining us on this deep dive into Tata Power.
Thanks, everyone.